It's not astrology for man. It's not reading tea leaves. I'll show you objectively, mathematically, and you'll be able to say, well, look, yes, it's an uptrend. Yes, it's going up. But no, I will not enter because we're not at a low risk proposition.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, everybody, welcome back to another episode of Talking Trades with me, Kevin Wadsworth, and my partner in crime, Patrick Karim. Okay, we are taking a look at low risk entry points today, and I think Patrick's going to use Nvidia to give us a walk through identifying those low risk entry points, because I know that as price moves up, people are very tempted at times to take entries in some of these stocks and shares, and you can do quite well by doing that, but you do not want to be chasing the trend. You do not want to be chasing a stock or a share. There are ways of identifying those ideal opportunities, those perfect points to take an entry. So, Pat, let's find out a bit more about this.
Yes, Kevin. Look, there's so many things we could say about this. Often when you hear about a stock, most people, you got to be really careful, because if you're not somebody who's looking at the charts all the time and ahead of the curve, but you hear about it, your taxi driver, your hairdresser, tips, the expression tips are for waiters. Well, when you start hearing stuff that's coming even from your grandma, hey, look, Nvidia, man, is really going up high. Well, often when you hear that, it's because of past performance. The price has went up, not just a little bit, it went up a lot for a long period of time, that it gave the confidence for people to say that out loud, to start recommending, right? Oh, look, it went up 100%, 200%. But okay, hold on. What you got to think from an objective viewpoint is, if somebody's talking to me about it, they already bought it, it already went up. How many more people are there to buy? Am I where nobody is in that instrument and people start piling up and the price starts expanding away from the moving average? Or am I at a place where I'm closer to the end while the price could still go up 10, 20, 30%? The true bulk of the move, did I miss it? The true bulk of the 100%, 200, 300% move, is it behind or in front of me? And that is critical. And guys, guess what? Yes, you can see that with charts. You can. It's not astrology for man. It's not reading tea leaves. I'll show you objectively, mathematically, that you also could pop up open the chart, no matter how bullish the narrative is. It's the next best thing since whatever. And you'll be able to say, well, look, yes, it's an uptrend. Yes, it's going up. But no, I will not enter because we're not at a low risk proposition. So right now, what I'll have to do is just show you the chart. So what I have right here is the Nvidia monthly log scale chart. So that's fine. The price is going up. It's going up. It's going up. It's still going up. It's above the 12-month moving average, that blue line. It's above the 3-year moving average, that red line. It's above the Ichimoku cloud. It's in an uptrend. All right, that's fine. But now, let's say somebody's told, I've never heard about Nvidia, and somebody tells me, hey, maybe it's time to buy some. It's been going up, man. I've been making all this money. Look at the bottom pane, guys. This is distance from the 36-month moving average. So this is a distance between, remove all of it. It's a distance between the price and that red line right there. That's 36-month moving average. When you are stretched from that 36-month moving average, it does not mean the price is about to top. It has topped, but it's telling you that the explosive move, right? This huge move that we had right here, look, this price range here, when it's coiled and tight here, you see how close I am to that 36-month moving average? That huge move, that's 1,500% move there. That huge move happened in the past, right? Even here, if I'm stretched, I did 700%. The remaining move above that is only 71%, right? So the huge move is in the past. So even if you're stretched and the price still manages to go up 78%, it was still correct to say that the low risk entry point was way before, right? To gain that risk versus reward, to get that 800% move. It's in the past. Look where we are today, guys. Look at that. We're back stretched from the 36-month moving average as much as we were back in that last crazy run from 2014 all the way to 2018. But furthermore, it's not that we're stretched. We've lost a rising trend line here. We've lost that ascent, that explosiveness. When you lose a rising trend line, guys, all it's telling you is that upwards momentum that you had has dissipated. It's gone, right? Eventually, there'll be less and less steep moving average, rising trend lines. But that run, that moving at, you are in a correction right now. Just like here, you see when that rising trend line got broken, got a retest, we were very close to the top, and then it unraveled. So look, you're stretched from the moving average. I could even show you here, there's these measured moves there. Breakout all the way here, pull flag. There's classical TA showing you that you're stretched and you've reached a measured move. So you're reaching measured moves. You are stretched from the moving average, but also you're losing momentum, right? The momentum is actually breaking down, right? So the price could go sideways, slightly up, but the momentum is not going up as fast. You're not at a low risk entry, right? All these, every time that you were here, these are when you went in a correction mode, right? This is when the price dropped. Goodness, like I'll show you guys, the price dropped 68% right there. From this top here, it dropped 58%. Low risk entries down here, not up here. These are higher risk entry points, and it's unwinding. It's baffling me, guys. I see a chart like that. Even if somebody tells me, man, Nvidia's rocketing, or whatever instrument, it's rocketing, Patrick, you should jump on board. Fine, it's still an uptrend. You don't short it. But if I would have entered much slower at the low risk entry point, I would 100% be taking profits right now, 100%. There's nothing wrong with taking profits when you're that stretched from the moving average. That's it, Kevin. Did I convince you? I hope so.
Yeah, and there's a big difference there, of course, Pat, isn't there, between sort of telling people to take profits and not taking a position. It's not the same. We're not saying necessarily that it's going to start plunging. The price is going to start plunging, but it's just that the low risk entry point is behind us. If you take a position at a low risk entry point, you have the luxury of time. You're down at that low risk entry point. You've already looked at the other pieces of supporting evidence. You know that the tailwinds are helping to push you. So you have the luxury of waiting and allowing it to play out. Whereas now when it's stretched, the problem is the longer you wait, the greater the risk increases. As time goes by, that risk is just going to continue to build as that momentum is lost. Yes, Patrick, that's fantastic stuff there, and a lot for everybody to think about, of course, as always. So don't forget to like, subscribe, and hit the notification bell if you want more content like this. Bye-bye for now.